All right, so the first question I'm going to tackle is, should you even consider building a platform? Okay, not everybody should, but let me tell you if you should. Number one, if you have raised some amount of money, $500,000, maybe even $1 million, and you've done really well for yourself, but you're really struggling at attracting more investors. In other words, you're asking yourself, how do I 10x my capital raise? How do I go from 500 to 5 million? Because I just met with 100 investors, and there's no way I'm going to meet with 1,000 investors to do that kind of thing. How do I do it? If you're asking that question, then you should strongly consider an online thought leadership platform. Now, maybe you haven't done a deal yet, but you're like, Michael, I want to scale this business right from the start. I don't want to wait a year or two until I raise some money. I want to go right full bore because I want to build this as a business and I want to scale it. Then this might also be for you as well. And it could be for anything, really. We're not talking specifically about creating a platform for multifamily syndications. Now, what will a platform help me to achieve? Platform, really, the core platform, is designed to automatically attract investors you've never met before and to turn them into raving fans who want to invest with you. Okay, there's a large degree of automations and technology behind the scenes that attracts them to you and welcomes them, educates them, and builds trust. Now, once you have that core platform built, your focus becomes on promoting your platform to more potential investors. And because of the automations, you're able to accommodate many more investors without creating extra work. Now, as you attract more investors, you can do more deals and raise more money, which means that you create more revenue in the form of fees and acquisition fees and equity. And then number 4, as you do that, as you create more revenue, you're able to invest more in the platform to attract even more investors to you. And this creates a virtuous cycle, not a vicious cycle, a virtuous cycle that allows you to continue to scale your syndication business and raise tens of millions of dollars per year easily, simply by continuing to invest time and effort into your platform. As you're building a platform, as you're getting a message out, dare say you're getting a mission out. The message and mission you're getting out is you're actually serving investors who have been shackled by the stock market for so many years. And in 2008 and recently saw their net worth, cut in half. And they're like, man, is there anything else out there? Okay. And you can help them with that. You can help them. So now we're to the next question. Okay, Michael, this is great. You got me hooked. I'm in. But what the heck is this platform thing? What is this thing? Okay, let me tell you what it's not. A platform is not a website. We have people come to us all the time like, I'm really interested in your platform builder incubator program, but I already have a website, so I don't think I need it. Okay, guys, a platform is not a website. A website is a tiny element of the platform. I mean, you can put up a really good-looking website consisting of one page, and as a syndicator, that's all you need. In a broader sense, a platform automates the process of attracting the right audience and developing raving fans that do business with you, allowing you to invest and grow your business. Okay, that brings me to the 3 pillars of platform building. So let's talk about pillar number 1. Pillar number 1 is attracting the right audience. Inside attracting the right audience, you have to do 2 things, 2 steps. One is you have to identify what's called your ideal avatar. This avatar, it's not a bunch of blue people, like in the movie. It's a marketing term describing a particular person. In this particular instance, we're talking about your ideal avatar, or in our world of capital raising, your ideal investor. And you want to identify, well, who is that ideal investor? Now, in the beginning, you might not know. You're like, well, shoot, anyone who's willing to invest in me is ideal to me. Okay, that's fine. But as people who have raised money before, you will find that you gravitate and attract a certain kind of person, and subsequently you repel another kind of person. Now, step 2 under attracting the right audience is, well, you have to capture leads. Well, what does that mean? Okay, capture leads means you want to build your email list. Now, I already hear you saying, Michael, email list, are you out of your picking mind? It's a dying medium. No, it's not. Where did you read that? Did you look at that? Email has been around for so long, and despite of what you hear, the open rates are still upwards of 30%. On our investor list, they're actually up at 50%. So email is still the most reliable way to deliver content. Now, is it the only way? No. Okay, there's other ways to deliver content, but email is super powerful. For example, you control your email. You control that. You do not control the search algorithm for Google or the Facebook algorithm that hides your posts from your friends. Okay, you don't control those things, and when they change overnight, boom, things go away, and that's happened repeatedly over the last several years. Emails you control. Okay, trust me on this. You need emails. Now the question is, how do you do this? How in the world do you capture people's email addresses? And the way you do it is by providing something of value for free. Okay, you're going to get something away for free. Something that's of high value to your ideal avatar, your ideal investor, something that they really would be interested in. Lead magnet is the marketing term for this freebie that you're going to have available on your website. So if you do that, people can go to your website and they see this free download. It's super cool. And now they can download it, and now you have their email address. But what happens if you do all that and then they never hear from you again? Well, that's kind of the end of the relationship. They have their free download, and that's the end of it. Does you no good at all. Platform dead. Okay? So you need to have the second pillar, which is to develop raving fans. And again, there's two ways to do that. There's serving and leading them, serve and lead. And the second step is to promote. Let's talk about serving and leading them first. You serve them with valuable and free content, such as blog articles, YouTube videos, and podcast episodes. And you do that because you're providing value to them. You're educating them about an asset class they may not be 100% comfortable with, because they have stocks and mutual funds and 401k is the only thing they've ever done. So you are providing value to them by educating them about this strange asset class called syndications. Because you're adding value, you're also earning their trust. That's kind of an indirect byproduct of you serving them as you earn their trust. And when you do that, you can lead them to take some kind of action that benefits them, and hopefully you as well. Step number 2 is to promote. Once you're capturing and collecting email addresses on your website, and you're serving people with great content, it is time to promote your message to find more ideal avatars, more ideal investors. And that's when you start thinking about getting on other people's podcasts. Here's what kills me. You get on someone's podcast, okay, which is not an easy thing to do, and you get on there, and the guest asks you how people connect with you, and you say, oh, my website is xyztmanagementconsulting.com, and no one cares, okay, because I already heard your story. There's no reason to go to your website anymore. But if I say, hey, my website is howtoneverrunoutamoney.com, and I have this freebie, and your podcast actually serves retirees, my gosh, people listening to that are going to go flocking to your website. And that's how you can really accelerate the lead generation. But it's only once you have the core platform built. Now, pillar number 3 is equally important, because without pillar 3, you can't scale your business. And that's exactly what pillar 3 is. It's called scale your business. And big surprise, there's 2 steps under that as well. One is you need to make a compelling offer that generates revenue. So if you're selling courses, you better come up with a course that your audience wants, is willing to pay for. If you're putting up live events or virtual conferences, you better put one in place that people want to pay for. So in other words, you need to generate revenue in some way. Otherwise, you can't scale your platform. A critical step 2 is to reinvest a portion of your revenue into the platform. Because here's the truth. A platform is fed by content. Now, the content creator is going to be you. You are the message. You have something to say to the massive about passively investing and how that will change your life. You are the creator of that content, and you should not outsource that. However, the actual production and distribution of the content should be outsourced, and that costs money. What is production? Production means to make a particular piece of content look good. Same thing with distribution. What does that mean? Distribution means getting the content out. So we have, through our own deals and other peers, we have calculated a business plan. And it goes like this. For every 32 people that download your lead magnet, one ends up investing an average of $70,000. Each new investor conservatively generates about $2,100 in acquisition fees. And that's if you only own about 25% of the GP because you have partners. Therefore, adding just 10 new investors to your database produces $21,000 in revenue for you. Okay, now you can get 320 leads fairly easily by hopping on a bunch of podcasts and talking about your free lead magnet. That alone will generate. Well, how much would you have to reinvest to continue building up your platform so it generates greater and greater capital for the business? And the magic number is 25%. So investing 25% of your ongoing acquisition fees will allow you to 10x your capital raise capacity in 18 to 24 months. Hey, and before you leave, make sure you subscribe to my channel below. We put out videos every single week, and you don't want to miss it. Also, if you haven't done so already, grab my free ebook here, okay? It's The Secret to Raising Money to Buy Your First Apartment Building Deal. It's a good one, so grab that. And hey, check out another video.